Welcome to Saltovation. The Saltovation Show is a podcast series featuring the leading voices in salt, where we talk about the issues and strategies to help you make sense of state and local tax.
Hi, everybody. This is Stacey and Alex from Saltovation. We're here today to talk to you about Maryland's new advertising tax, digital advertising tax, that is, and some of the nuances and things that are evolving with this particular tax. So with that, let's turn to some of the intricacies. And Alex has done a little bit of research in this. And so, Alex, you want to let us know kind of some of the high level on this particular tax and what this means for taxpayers?
Honestly, I wish I could, but I don't think we know anything about this tax. It's startling in its vagueness, which is why it has received so much feedback and been surrounded in controversy. It's not well vetted at all. And it's funny that they actually call this a gross revenues tax, which is not a term. We've been practicing in this space for quite a number of years, and we've heard of gross receipts taxes, but I've never heard of a gross revenues tax. I don't know if you have.
No. In fact, I was wondering if we knew kind of what the difference would be. I mean, because at this point, do we know whether we're able to pass it through to taxpayers similar to a sales tax, or do we even know that yet?
We do actually. So in the original bill, it was silent on that fact, but there was a follow-up bill that was a part of the veto override that did say that you cannot. So it is a tax on the entity.
Okay.
You cannot pass it through. There's one thing we're certain about now. Yes, that's
right now today.
So we'll try to tell you what we know, which is not a heck of a lot. But this is Maryland's digital advertising gross revenues tax. It was originally set to become effective mid this year, but it was pushed to become effective January 1, 2022, because even Maryland wasn't quite ready to implement it. The legislature in Maryland pushed a lot of the onus onto the comptroller's office to create forms and regulations and even define sourcing. And I think they're going to need some time to work through all that. So we don't have any of those detailed information yet. I can read you the definition. It's rather broad. Digital advertising services are defined as any advertising services delivered on any type of software, website, or application that a person can access on a device. So,
broad definition.
It's quite broad. I think the intent here is to go after the likes of Google and Facebook and some of those other large online social media platforms, which I think potentially makes sense from at least an intent perspective. But we're not quite sure how this is going to, who else this can affect and who else it can capture. And I think one major concern is really tax pyramiding, right? If it's not clear at what stage of the transaction it applies, or if it applies at multiple stages, right? So we can conceivably run into a tax on tax situation, which wouldn't be very good. So the rates they start at 2.5%, and they are phased in at all the way up to a 10% rate. It only affects companies who have global revenues above 100 million. So at that level of global revenue, you would be at that 2% tax rate. So,
and does the rate increase as your revenue increases?
That's right.
Correct.
But you do have a filing requirement if you have Maryland sourced gross revenues above 1 million. Again, how that sourcing is determined is unclear. I don't know if it's going to be some sort of census approach or we're not sure. Kind of circling back to that follow-up bill that prevented the pass-through, it also had some exclusions. They're excluding certain broadcasters, and they're excluding certain news outlets as well. So I don't know what to say about that, but I think that's probably a smart move. But I think it still leaves to potentially capture lots of other companies that it's not necessarily intended to capture.
That broad definition, I would imagine there's a lot of taxpayers out there that could get caught up in it, and they may not necessarily know.
Absolutely. And as we mentioned, it's very controversial. There's been a lot of challenges. The practitioner community has cried out about this. If you're watching this conversation with Stacey and I, and this is the first time you're hearing it, we're certainly not the first to talk about it. It's been very heavily discussed by the practitioner community. There's been lawsuits filed both at the state and the federal level. There's questions whether it violates the Internet Tax Freedom Act. It may violate the Commerce Clause. So there's some pretty strong arguments against this law's constitutionality. So we'll see how the litigation unfolds going forward. But I think that's really all we really know.
Right.
Yeah.
How does it relate or compare to some of the international digital taxes that we've seen recently?
Yeah, no, it's funny that you asked that, because it's actually Maryland has taken a bit of a hypocritical approach here. It's internationally, and I'm not an international expert, so I apologize for my vagueness on this, but my understanding is that the OECD is working on its Pillar 1 project right now, which is looking to standardize some things from an international perspective, and a lot of countries, until that project is actually implemented, they're looking to tax digital services as a temporary stopgap. And the reason that they feel like they need to do that is because they're at the international scale. Nexus is defined by permanent establishment. It's a physical presence standard. We don't have that at the states anymore. Now we're economic nexus here, right? So we can reach cross border from a state to state perspective. Sure. Whereas the countries cannot, not yet. So for them to do something like this, it makes sense. For us to create an entirely new tax, to do something that we have other tools to capture that revenue that Maryland feels like it's missing, is an interesting approach. That Maryland doesn't feel that it can do it through its sales tax system or that it can do it through its corporate tax system is interesting. As a funny anecdote, the United States, the White House is opposed to the digital service taxes that the international countries are trying to implement. And it's just it would just be funny to imagine Janet Yellen in a meeting with the other European leaders and claiming opposition to these European taxes, and then all they have to say is, well, what about your own states?
Right, exactly.
So I don't know. It's quite an interesting thing that I think we need to keep watching to see how the litigation and what we see from the comptroller's office as far as regulations go. But at the moment, this is definitely something to watch. It's a big development.
Yeah, and we also know that there are other states out there that have had similar proposed legislation, but those haven't passed. And so I guess we just need to wait and see what happens with Maryland as well as other states, because other states jump on board.
Absolutely. That they're sitting in wait, watching to see how this develops. 100%.
Okay, cool. All right. Well,
right. Yeah,
if you want to find out more about Maryland or anything else, join our Saltovation podcast in the future and reach out to us anytime. Thanks, everybody.
This podcast is for educational purposes only and is not intended, nor should it be relied upon as legal, tax, accounting, or investment advice. You should consult with a competent professional to discuss specifics of your situation and the applicability of the information presented.